What have you been thinking, Jason, for the last month about across the board, stocks, bonds, commodities, crypto? What's going on?
Yeah, I would say that, the big picture stuff, Joe, is that I do think, even though there's been a fair amount of head fakes in terms of the move towards value, I think what's going on in the market now, my own opinion, the indigestion that you're seeing, is that I think people are actually taking the rotation to value more seriously, which is to say that we saw a lot of head fakes last year. This one seems real. It seems real because it appears the Fed may be behind the curve, and it's telling you it wants to be behind the curve. But the prospects for higher long-term interest rates are clearly having an impact on growth stocks. I think that's number one. Number two, clearly, I think the Fed is, in my opinion, is going to stay easy a lot longer than people thought. I think there's going to be upward pressure on long-term interest rates, and that hurts long-duration assets like high-flying tech stocks. And then lastly, I think it's very hard. It's very consensus, but it's very hard to get bullish on the dollar, mainly because we have a twin deficit, trade deficit, and a budget deficit that's approaching 20% of GDP. Now, you have to buy something else. There's not a lot of other great options in terms of fiat currencies, but certainly, gold, copper, lithium, cobalt, there's a lot of other things, hard assets you could buy versus the dollar that are decent hedges against inflation.
We talk and you talk, and we're really Fed focused, and the Fed seems to be, if you look at outside influences other than the private sector, it seems like the Fed takes a lot of the oxygen, not as much with fiscal policies and changes in administrations, changes in government. But I just want to ask you this, and I know you, you know me. I know you're if we had to describe you, you might be a small government, low taxes, big private sector, less regulation. You've espoused those values over the years that you've been on.
Absolutely.
Here's the Journal today. It's a Phil Gramm and Rick Scott piece. Biden's plans are already hurting the recovery. I think it mostly focuses on the benefits that we saw with that employment report, that maybe some people aren't that eager to get back to work because they're doing pretty well at home. That's just the beginning. In total, take this latest deal we're talking about, where Republicans are saying $600 billion, Democrats want to do $2 trillion through reconciliation, and they might. Think of the tax increases that we're talking about. Think of all this stuff that's happening. Do you worry about any of that, or is that kind of all down the road? We don't know whether it's going to go through, or is there any trepidation in the financial markets that those things could actually come to pass?
Well, Joe, those are two separate. In some ways, those are two separate questions. Or two separate answers, I'd say. I worry about it a lot because one thing I've learned in running a company for 15 years is that people do precisely what they're incentivized to do. So I'm a big believer in the incentive model. And if you're paying people more money to stay home than to work during the summer months, it seems like a pretty easy choice to me. And so. Also, as far as getting companies to invest productively, to invest in capital, as opposed to focus on financial engineering, I believe that the tax code goes a long way in doing that. And I think the policy mix over really since 2008 has been much more skewed. And it's been more true in Democratic administrations than Republican administration, the one Republican administration. But it's been much more skewed towards financial engineering as opposed to capital investment. And I think right now you're seeing that, I think, in some of the more smokestack types of industries. But it worries me quite a bit. I don't view people's income or corporate profits as some sort of dispensation from the government. I believe those are private property. Government is there to serve us. And I do think that, generally speaking, private markets make better decisions over the long term in terms of capital allocation than small groups of often unelected people.
Shepard Smith here. Thanks for watching CNBC on YouTube.